Well, more to talk about in the soybean market. Kind of interesting there as well. As we go to tape, we're off about 4 to 8 cents across the board. Um, let's talk about Nove. Look, 831 to 1046. That's $2.15. I said that last week. That's going largely um, not talked about in the national media. I mean, our recent low is what the technicians will be looking at again. That 25% pullback, right? That's these Fibonacci levels that these technical traders look at. So that's interesting to see. So that kind of held true, and that's going to be something that folks will be looking for going forward. But again, it's a $2.15 rally, and again, the national media really hasn't said that much. And you know what? We had a spike up to 28-month highs. You would have thought we would have heard more about that, or at least maybe some inflation stories now and again, but no. So it's something that you can't ignore, even though the media are ignoring it. So make sure you get that risk down on paper and you have a plan, because that's a very good move. $2.15, 28-month highs. But you know what? It's almost like they're talking to an empty cannon because nobody's listening, but you have to listen, because this is how you manage your crops. So don't let this opportunity go away. I know last week was a volatile week, and on the weekly changes, if you want to talk about that, we were off almost 45 cents, 44 and a quarter cents lower on the week. But the interesting part about that is this, is that we saw managed money, those funds back, they're now long 211,000 contracts. They added 20,000 new contracts to that level. So basically long a billion bushels. That's a billion bushels of a $4 billion bushel crop. Last week cost them 470 million bucks on a 45-cent break. That's real cheese, as they say, right? So funds kind of sucking some wind again today as well. We'll see if they hang in there, because that's going to be something we're going to now have to watch. Are they going to start to bail? Because we all know that when this money comes in the market, they can bully it a little bit, and they can move things more than maybe you would like to see them move things, both the upside and the downside. But you need to know what those numbers are so that you can react, and you've got that risk down on paper. So again, a $2.15 move, 28-month highs. That's a big deal, right? You can't really ignore that, so you have to have your plan ready, but also know what the other team's thinking. Have an idea about that playbook, and that playbook is this. They bought 20,000 more futures contracts last week. The funds are now long over 200,000 contracts. That's a pretty big deal, so that can't go ignored. So keep that in mind, because if this thing weakens more and they start to get out, well, then that's going to change the landscape, right? That's the only reason I tell you. I'm not trying to give you an idea of where it's going up or down, but you have to have these inputs so that you can make the right call, or the output from your plan is the right call, because these are the types of things that everybody else is looking at. So keep that in mind. Maybe I chalk it up to a little bit of harvest pressure today too. That's going to be out there too. But after a move like that, and a little weaker last week to the tune of 44 and a quarter cents, backing up here, looking for a little place to find some sort of footing and some sort of support. So keep an eye on that and know what the other guys have got going on. Funds are still long. We'll see if they start to flinch at all.